How's it going, guys, and welcome back to the channel. In today's video I'm going to be going over liquidity. I thought I'd already done a video on liquidity, to be fair, but looking back through my channel I've not actually done one yet. So liquidity is a really important concept to grasp and just get used to. So the first thing that you need to note when it comes to liquidity is that liquidity is resting above and below every high and low within the market, and liquidity is pretty much everywhere. So for example, what you'll see is if we are in a bullish trend, what you'll see is price moving something like this. Obviously, it won't be moving in straight lines. Obviously there'll be structure and complex pullbacks and things like that within, but the general idea is that price will move like this within a bullish market. What you will then get is you will get people trading the regular retail strategies. Obviously I'm not saying like the way I trade is trading with the banks or anything like that. At this point supply and demand is pretty much a retail strategy because every man and the dog are trading like that. But with that being said, the regular retail strategies that people have been trading for many years now, like trend line, breakout strategies, things like that. So what you'll get is obviously you will have liquidity resting above and below all these highs and all these lows. So there'll be liquidity here, liquidity here, liquidity here. And why is liquidity above and below these highs? So what you will notice is that people that are trading these trend line strategies. So obviously you've got a trend line here, you've got a trend line obviously on this side as well. So you have an ascending channel sort of thing like this, and what you'll see is people will normally go ahead and trade on the third touch of a trend line. So for example, if we are bullish, first touch, second touch, third touch. So what we will see is we will see people that are trading the regular trend line strategies. They will enter on the third touch. They will put their stop loss below, probably below these lows right here, just to try and keep their stop loss safe, and target will be wherever. So at the moment, obviously, this trade here would be working out, but what you will see is often you'll see price come down. You'll see price grab liquidity from below these lows. So as I said before, there's liquidity below every low and above every high. So we've got liquidity right here, and what price has done as it's come down, it's swept liquidity below these lows and it's continued up. So the people that are trading these trend line strategies, whatever it may be, whatever strategy it is, the people that are trading these strategies have now been taken out. The market's grabbed liquidity to fuel price to the upside, and price has now continued up. So that's the overall process of liquidity when the market's trending like this. For example, obviously these strategies do work, and a lot of the time price will continue. They will tap into their orders, fulfill their orders and continue up. And this might have been a winning trade. You might be able to pull 2, 3, 4 hours from this, and this could be a winning trade. But the majority of the time, what you'll see if you go through the market yourself is that price will come down, sweep these lows, and continue in the given direction. So if I just go ahead and delete this, so what you will also see in the market is you will see a kind of a range. So for example, if we have got a range, this could also be considered a base. So right here we've got a range, right? And what you might see is you'll see people you'll see people trading support and resistance. So they might have a support level right here, they'll have a resistance level somewhere up here, whatever it may be. And you'll also see people trading breakout strategies. So in this example right here, what you'll see is you'll see people entering a trade from resistance. So people will be entering trades from around here, stop somewhere above this resistance level right here, looking to see price continue down. What you will then see is people trading the breakout. So for example, you will have orders somewhere around here. The stop will be wherever, and then they will be targeting somewhere to the upside. So you'll have buy stops, and what you'll see is that price might then go ahead, and what it will do is it will come up, it will tag these people in, and then price will then reverse and come down and take them out. And obviously in this example right here, price has come up and just basically taken these orders out right here. And like I said before, there's liquidity above every high and every low, and in this case here what we have equal lows. So we have equal lows and we have equal highs. So there's liquidity resting below here and above here. What's happened then is then we've come up, we've taken liquidity above these highs right here, and what's happened then is price has come crashing down. It's taken liquidity above these highs, and then it's seeked liquidity below these lows. So what's basically happening is, obviously we're taking liquidity above here, and then we're taking liquidity above here. And what we look to do when we are trading supply and demand, if I just delete these, what we're looking to do when we're trading supply and demand is we're looking to enter the market, somewhere around here. So what's happened here is our POI has swept liquidity, it's broken structure to the downside. So if I just mark that out here. So we've broken structure right here, we've swept liquidity above here, and we now have a perfect point of interest to take our trades from. All the while we are getting, the same kind of situation. What we are getting now is we're obviously getting that trend line again. And what you'll see is obviously there will be liquidity, resting below here. So if I just mark that out. So liquidity. Obviously then there will be liquidity resting below here. There's been liquidity swept above this high right here. It's tapped into our POI, then you can drop down to, a lower time frame, whatever it may be. Get your entry criteria on a lower time frame, and then continue to target this liquidity here. And that's the overall idea of liquidity. All you've got to remember is that there's liquidity resting below every high, every low. And you just want to obviously watch out for where liquidity may be resting when you're looking to enter the market. And another thing that you've got to remember is obviously when you're trading, someone's got to lose in order for you to win, and the other way around. So you've got to lose for other people to win. So just be aware of where liquidity will be resting. So it will be below lows, it'll be above highs, it'll be below equal lows, it'll be above equal highs. It could be used as inducement. So for example, if this high was a little bit closer to the point of interest, that could be considered inducement. Inducement might come in the form of equal highs, then liquidity is, resting above here. But one thing that I will say is don't let liquidity scare you from entering positions and entering trades, because at the end of the day, no trading strategy out there has 100% win rate. You will lose from time to time, but just be aware of where liquidity may be, where liquidity is to target, where liquidity might be resting, and where obviously price might seek liquidity from. Just use this as a confluence in your trading. But yeah, that's just as simple as liquidity can be. You don't really need to overcomplicate things or overthink things. So that's just about it for this video, guys. If this video did help you out and it did provide you any value, please remember to leave a like on today's video, subscribe to the channel for more videos. As always, if you have any questions, feel free to drop them in the comment section down below. And without further ado, guys, thank you very much for watching, and I'll see you in the next one.